Joining us now for market update on our Kenyan markets is Johnson Nderi Investment Analyst at Suntra Investment Bank. We are unable to bring you a normal markets update in terms of what's happening on the Kenyan market. But Johnson, thanks very much indeed for joining us for a discussion on the market today. Talk to us about the exuberance in Kenyan equities that we saw post, of course, the inauguration of President Uhuru Kenyatta.
Well, what there was a lot of money parked in the sidelines, anticipating, they were unable to come into the market then because they deemed the political risk a bit too high. So what they did was they suspended all investment activity up until post-election. And when everything seemed calm and everybody was certain that everything was okay, they started putting back the money into work. And that's what drove up the market earlier on post-election. Yeah,
maybe these people should have been watching CNBC Africa, because throughout our discussions, we were talking about the fact that the Kenyan market was certainly poised for a rise, and that we were seeing investors interested in the fact that we had a peaceful election, and we also had everything that was done post that election done in an orderly manner. So maybe you need to be talking to them. But let's talk about just how far those yields, let's just swing away from the equity market and talk about how far perhaps those yields are likely to go post-election. Do you think this rally still has some legs to go?
Well, there's some stocks we think that are still undervalued, especially relative to everything else that's gone up. Yeah. So whether your assumption is that there might be a correction coming through later on, there's still some stocks out there that look interesting and can be picked up. Yeah. Nevertheless, with regards to whether the market rally has legs or not, one area of our concern is that this market rally has all been sustained by lower interest rates. It's been sustained largely by a feel-good factor, and that you can see both in the shilling and in our stock market indices. So I think there's quite a bit. People think that there's Kenya is back open for business, and probably you'd see a lot more funds coming in, either from foreigners or from diaspora, people in diaspora, sending back money, putting it to work in the country.
What would you be recommending at this stage?
Well, we still think energy is an interesting play. There's and the energy the one energy stock we like a lot is Kenya Power and Lighting, both from a short-term, medium-term, and long-term perspective. All three seem to work for us. Yeah. We still think some banks, especially the ones that are trading at less than twice their book value, right now look attractive. We think NIC, CFC, Stanbic, which is really a turnaround case. Housing finance are very interesting. We've got some stocks like industrials like Carbasid, which also interest us because of the story of economic growth. And of course, we think that in the food preservation area, which will grow in tandem with food, and of course the expansion of the bottlers locally, that's fertile market for investment. That's why we like that.
Yeah, let's talk about some of the individual stocks, Johnson, if you don't mind. We saw, for instance, today TransCentury down the most in 6 months. I mean, 5.4% on that. Is there a story there, or is someone just booking profits?
Well, they announced yesterday. Whilst the announcement, depending on your perspective, I think a lot of investors took it as a negative because perhaps it didn't quite, live up to its promise. I think if you looked at the price rally earlier on, investors are a bit optimistic. So upon announcement, I think they opted to take profits away from the table before what they thought was a lower correction comes through. Yeah. And they could have been right. I think the dividend in a sense was disappointing, but for us what caught our eyes was the cash flows, which raised a bit of concern. So we don't think this is the time. Again, also the return on equity is a bit low. We're talking about single digit. So if in that company we thought rather than holding TransCentury, it'd probably be better to hold East African Cables directly, which really is one of their constituent companies.
Yeah, so the rally tapered off today in equities. Let's move over to the fixed income market now. The rally in bonds seems to have continued today because of the yields are lower again today after that peaceful election and of course the inauguration of President Uhuru Kenyatta. This bonds rally, where do you see it going?
I'm very concerned. Obviously, there's still opportunity between now and when President Uhuru, should I say President Kenyatta, announces his second. It feels like deja vu.
It does, doesn't it?
Yes. So when President Kenyatta comes through with his second, with his budget, that I think that will be the appropriate time to form a firm, opinion on where interest rates are going. For now, we know there's quite a bit of spending that must come through, mandated by the new constitution. But we also recognize that there are opportunities of raising funding other than through taxation, which include asset sales.
Right.
So if asset sales can come through, where they've got a huge following with National Bank, which can serve the dual purpose of improving the quality of the bank when you have more private participation. So arguments like that give us a bit of optimism. Otherwise, I think we still have the same outlook, and which puts us a bit bearish medium term for bonds. Yeah,
I would say there should be no surprise, because this was, after all, the man who was in charge of the nation's finances before the elections, and really it should be a continuation of the same.
Yes, and if you remember, he came through with the monetary stimulus, which in our opinion is what preceded the inflation of 2011. So for us, okay, we understand that it's the central bank may have learned its lesson, if I may say so.
Yeah.
So they've been holding it tight through. But when the pressures for spending come through, we're not very sure they will hold on to the reins. So that's where our concern comes from.